Hi everybody, this is Ospreyeye from mychartcoach.com, and we're going to take a look at ticker symbols either in play or setting up. Okay, or in this case, okay, this is in play as well. We'll take first starting off here with FCEL. Okay, this is fuel cell, and it did close above 70 on RSI, so it's at the overbought power level. Above 70 is overbought on our side, and if you can see here on this last big run, it did top out above 70. So we'd like to look at the past historical trend to try to anticipate future price movement. So that time it did pull back. So we'll see if it can hold above. You notice here Fasto had been above 80 for quite some time, and then pulled back, and then it was back above 80 while the share price was heading higher. It's back down to 67. So there's some more fuel in the Fasto gas tank. All right, we've got plus DI here with a parabolic move. Big spike on plus DI, and then if you look here today, what happened was that there was a gap fill. And so a gap fill is when a gap is created on the chart, like back here in April. This is the top of the gap. The bottom of this doji here is the top of the gap, and then the open the next day, the top of that candle is the bottom of the gap. And as you can see here, the share price pulled back, and then it closed above the bottom of the gap back here in what is this, the 22nd of June, and then it continued running higher. And what happened was today this gap finally filled. Today the top of the gap level was hit. So this is what we call a gap fill. And then if you notice here that a long upper wick formed on today's candle, that's where the share price ran to high of day. Notice it hit almost at the 200-day simple moving average level at 188. I'm sure there are a lot of orders stacked up at that level. So the share price came up to that level, and then people took profits, and then notice it pulled back. And this is well above the upper Bollinger Band. And you can see it pulled right back to the top of the gap level. So that's going to be the big level to break tomorrow. We're going to call it 160. So it needs to get above 160. If it can do that, then it could continue heading to the 200-day simple moving average. Notice it's been riding EMA's 4 and 8 support during this entire run above. Once it finally broke above this 100-day simple moving average, that on a big pullback, that's the big level to hold down here at 129. So going forward, the top of the gap needs to turn into support, and if it can, then you could see a run up to the 200. Just keep in mind that this is a climax move. Notice that there were four green volume bars in a row, 4 white candles in a row preceding today, where another white candle formed, and then a giant volume spike. Notice that it was an increasing volume pattern and then a huge volume spike today. We call this the climax spike, and we call that because it's the peak following a multi-day run, and it signals a temporary top, and the long upper wick signals profit taking, possibly dilution. And so it's always a signal, especially when this is formed during a multi-day run above the upper Bollinger Band at a key resistance level like the 200-day simple moving average. If you're a trader, to lock in gains. Okay, that's for people that are looking to trade this. And so yeah, this is a very nice uptrend. The chart is still very strong. It's just signaling that just be on the lookout tomorrow for possible resistance. If it goes above 160, then that could signal more upside. If 160 turns into resistance, you could see some consolidation. Okay, so yeah, nice move though. Congrats everyone on FCEL. Okay, let's take a look at JNUG. Okay, this is heating up. This is the junior gold miners bull 3 times ETF. Okay, this is the way to go. This is one of the ways to go if you're looking to trade gold and the gold miners. And so if you look here, it's above 50 on RSI. You want to see it stay above that level. As you can see back here, it's had a really hard time staying above 50. The last time it had a good run, it got above 50 on RSI. So that's going to be a good barometer if you can tell if JNUG is actually really going to get something going here. It's got to stay above 50 on RSI. If it stays below, that's signaling that it's not quite ready. Now we've got Fasto back up here above 80, so it's up here at 88. So the Fasto is heating back up. Nice crossover down here in ADX where the green line crossed the red line to the upside. That's signaling the bulls are really starting to heat up. And so what happened today was there was a nice close above the 50-day simple moving average, currently at 1790. That's this green line right here. and the close above is a really bullish development. That's signaling potential more upside. If you notice back here that there were closes above the 50-day simple moving average, and it failed to hold, and the share price pulled back. So it has to get above that level, hold that level in order to really get going. Notice the close is also above the middle Bollinger Band. This cluster of candles here has been trying to turn the middle Bollinger Band into support, which is currently at 1728. That is the key level to hold. Notice this descending resistance line. Okay, that's lined up with high of day. You want to see a close above that level, and the next target is the 100-day simple moving average at 2061. Okay, it's really close by. It could make a run to that level if it can get above this red descending resistance line and hold above the 50-day simple moving average. And then, if it can possibly get above the 100-day simple moving average, then you'd be talking about a run possibly back up to the 200-day simple moving average at 28. And that is lined up with, this prior resistance zone. So, yeah, so it's been forming this sideways channel. The Bollinger Bands, have tightened a bit. And, it seems like this is set up to potentially get an uptrend going. Now if it drops back below the 50-day simple moving average in the middle Bollinger Band, that'll be a signal that it's not quite ready to go, and you could see a drop back down here to test the lower Bollinger Band in the bottom of this channel. Okay, so yeah, check it out. There was also a big volume spike today. So the big volume behind the move, it was the largest volume in the month of July, and you'd have to go all the way back here to June the 14th to see this type of volume. So that many times, like the saying is, volume precedes the move. So we'll see here if that's the case with JNUG, and if this is signaling more upside potential. Okay, let's look at CAPR. Okay, this stock is heating up here. It closed up 9% today. It's got a nice bounce off of 50 on our side, so it's staying in that 50 to 70 bull zone. That's what you want to see when a stock pulls back. Notice it was above 70, so it was at overbought levels. It had a nice run, and then it pulled back, and then it hit 50, and it's bouncing off of that level. That's exactly what you want to see. So, we could get a little reversal here. You want to see a crossover here on Fasto, the black line crossing the red line to the upside. And if you notice, the share price had closed had this basically one-day move, and the candles worked back into the bands. The upper Bollinger Band's currently at 134, and that's also lined up with the closing price here on the 18th. That's going to be the big level to break on the upside. The candles came back and they hit this middle Bollinger Band at 89 support zone and bounced today. And so what you want to see is a close above EMA4 at 105. That's the pink line. And if that happens, there could possibly be a run back up here to this upper Bollinger Band and the closing price on the 18th. If you notice down here, there's a declining volume pattern. Okay, notice the volume has been decreasing every day. And then today there was extremely low volume, and so many times this is leading to a volume spike. And so what bulls are looking for is a bullish volume spike. Notice also you've got the 50-day simple moving average down here at 83. So this is a really big support zone between 83 and 89. If you see a drop below the 50-day simple moving average, that'll signal the chart's busted. And what could happen is there's a gap down here below that could possibly fill between these two candles, between high of day on the 17th and low of day on the 18th. And so that's the downside risk, is a gap fill to the bottom to 70. And what would signal that possibly happening is if the 50-day simple moving average in the middle Bollinger Band failed to hold. Notice those lines have been support. With the candle on the 18th, the resistance level that it hit was the bottom of the gap resistance level. There was a gap back here in May. And the open was, the close was up here, which is the top of the gap, and then the open was down here, and the high of day hit this level right here, which is representing the bottom of the gap. And so that's always, like we said, like we say in our videos, that's a huge level to break. And so you're going to want to see a close above that level. If that happens, then that would set up the potential run to the 100-day simple moving average. So this is another gap play, and so we're looking for potential potential bounce off this, middle Bollinger Band and 50-day simple moving average support zone that looks like it possibly started today. It did get a bounce today, and we're looking for a potential follow through and a close above that level to signal more upside. If it fails to get back above the bottom of the gap level, it could signal that it wants to consolidate and it's just not ready to go. Okay, let's look at AEZS. Okay, this stock here looks like it's set up for a bounce. Now, people ask all the time, yeah, if you look up here at, we always like to look at RSI and FASTO to see what level it's at. At 66, you can see it was above 90 and it pulled all the way back to 66. So the indicator has reset, along with FASTO going from above 80 up here down to 52. So we say that these indicators have reset from their overbought levels, and now today what happened was there was a gap down open with a doji forming off of EMA 8 support. This is a doji. This candle forms when the open and the close are at the same level. So even though the bears were able to drive the price down to here, and the bulls were able to drive the price up to the top of this wick, the open was at the same level as the close, and this creates a doji, which represents indecision. Okay, it signals indecision, and many times when this pattern forms, when this candlestick forms during a downtrend, that signals a bounce, especially when there's multiple red candles and there's a gap down open. It's always better when you have the doji with the gap down open, and so this is a nice bounce play setup. So we'll see tomorrow if it can get a bounce off of this level. What bulls want to see is a close above EMA 4 at 227. If that happens, then you could possibly see a run back up here to the 200 and 300 day simple moving averages. Once again, this was a really light volume bounce. Okay, and so many times that happens on a pullback. This is a signal that the sellers have tired, but also that no buyers have stepped in. And so what you're looking for now, notice how each volume bar is smaller. This one's slightly maybe about the same, but they're getting smaller and smaller. We call this the declining volume pattern. And so bulls now are looking for a bullish volume spike, a green volume spike above these prior candles, these prior volume bars, and then a push through resistance. That's always the setup. The key about with all of this chart stuff, the key is to learn the patterns, because what you'll find is the patterns never change. The only thing that changes are the ticker symbols, and so we're constantly looking for the same patterns that deliver the same results historically. And so yeah, so check this out. So we've got EPIX here. Okay, it's at 40. It broke above 30 here on RSI. FASTO at 72. It's still not at overbought levels. You want to see RSI get above 50. And so for this, the reason why I'm showing you this chart here is because it's trying to turn the middle Bollinger Band into support, which is currently at 43. So going forward for this stock, candles forming above the middle Bollinger Band, that 43 level, that signals more upside potential, and you could possibly see a run up to the upper Bollinger Band at 60. Notice that the 50-day simple moving average is way up here at 97. So this has some upside potential if it can turn the middle Bollinger Band into support. Stocks in a downtrend form candles below the middle Bollinger Band. Notice the middle Bollinger Band is the dotted purple line. It's in between the upper Bollinger Band, which is the solid purple line up here, and the lower Bollinger Band, which is the solid purple line down here. And when you get a close below, many times that signals a downtrend is about ready to start, the beginning of a downtrend. And that's what happened here. Notice the huge pullback once that middle Bollinger Band broke, and candles haven't been above that level until today. This was the first close above the middle Bollinger Band. These candles broke, the previous two candles broke the middle Bollinger Band intraday, but failed to close above, and it's always about the close. The close is the key. So it closed above today, so this is a good sign that maybe this chart's heating up and a possible uptrend could start. Now that level has to hold. If it closes back below, then that signals downside risk. Look what happened before. You do not want to be holding this stock if it's forming candles below the middle Bollinger Band. Notice there's a slight uptick in volume. This is a thinly traded stock. Bulls want to see a volume spike and another white. They want to see a white candle form above the middle Bollinger Band. Okay, so here's Bounce play to keep an eye on. This is CYTX. Okay, the stock is extremely oversold. Notice that our RSI is at 20 here. Okay, so it's below 30 is oversold on the RSI. And then now you have FASTO down here at 6.17. Notice how the black line and the red line are pinched. So this is set up for a bullish crossover. A bullish crossover is when the black line crosses the red line to the upside. Many times that can signal a bounce if the stock has been pulling back. And so what happened here, this is another gap play. You know, gaps are going to come up a lot if you watch these videos. And so this is the top of the gap up here at about the 110 level, and that was the close. And then the open on the 24th was way down here at 50 cents, and the share price ran up to here at the top of this wick. And so that is the top of the gap. It's about 54 cents right there. And so what we're looking for here is for a potential bounce and then a run back up to the bottom of the gap level. That's always a huge level to break. Many times a dead cat bounce will hit that level, and then it will stall out at that level, and that'll be it. So it'll be a short-term move. Now, if it does get above that level, the next target is EMA 4. Okay, and that's currently all the way up at 60. But you got to keep in mind it's coming down really fast, and that's going to be close to that bottom of the gap level tomorrow. And so the key going forward for people that are trying to play this CYTX is you want to see a close above EMA 4. Once that happens, then that'll signal that there's potential more upside, and it's got to get above the bottom of the gap. It has to form candles above the bottom of the gap to get something going. So right now, this is just a dead cat bounce play, and we're just looking for a technical bounce. And so notice that there's a series of higher lows. So it has higher lows, and then but it's also in this downtrend. And so notice there's a declining volume pattern. So what we want to see is the chart get a nice bounce. Let's see right here. Yeah, if you look right here, there's a very, very tight Bollinger Bands, and so we want to see the break above the middle Bollinger Band and the 50-day simple moving average, or the 50 simple moving average. This is a 15-minute chart, and if you can tell, you know, when a stock has very, very tight Bollinger Bands like this, it signals that a move is imminent, that something's going to happen very soon. There's either going to be a breakdown, and it's going to come down here and it's going to test these prior lows, or there's going to be a breakout. This chart, it cannot stay for very much longer with this tight of Bollinger Bands. It signals a move is coming soon, and that's why I posted before that I thought possibly a move would come today, because the Bollinger Bands had been getting very tight, and there was a close above the 50 simple moving average yesterday and the middle Bollinger Band. Those levels failed to hold, and it's just riding right along with those moving averages. It closed right there with them. If you look over here, the 50 simple moving average is at 463, and then you've got the middle Bollinger Band at 462, and it closed today at 46. So it closed right at that level. So if there's a break above, then that's going to signal a breakout higher. Now the 100 simple moving average is the big next target, and that's all the way up here at 60 on this chart. Now it's going to have to break the bottom of the gap, which is lined up right here at 55. Now you can get a closer look here on this chart. This is another 15-minute chart for CYTX, and as you can see here, the Bollinger Bands are very tight. We want to see a break above the green line and the middle Bollinger Band. They're both converged right now, and if they can, then you could see a possible breakout with a run up here to this 47.5, 49 level. That's going to be the 49 is going to be the huge level to break on this chart, and if that happens, then it might make a run up to the bottom of the gap and maybe to that 100 simple moving average. So keep an eye on it. The chart's wound very tight. It seems like a move is coming soon. And then for the final stock in this video, check out OTTV. Okay, it's got a nice bounce going right now. It closed above EMA's 4 and 8 on the daily chart, and so as long as they hold currently at 0.003, then there'll be more upside potential. If they close back below, it'll signal it's a risk to hold. And yeah, you never want to hold these stock score charts
charts when they're forming candles below EMAs 4 and 8. Okay, so yeah, thank you very much for viewing this video. Check us out at mychartcoach.com and our YouTube channel at mychartcoach.com for more charts and technical analysis.